The year 2022, no doubt, was marked by negativity and frightened by market sentiments as inflation, interest rates, and consumer prices soared with the Russia-Ukraine war raging on. The capital markets as well as crypto assets saw heavy losses, while fears of an economic recession gripped investors. For Nigeria, while rising inflation is expected to temper and begin to a downward trend, the major challenge for economic managers will be financing the country's 2023 budget, and more so due to the already very high public debt stock. As the 2023, of course, it's on already with high hopes and optimism. There are projections that the global economy will grow at a slower pace this year, as one-third of the world's economies will slip into recession. The big question asking for answer now is, which is trending, is with this trend witnessed in 2022 continue in 2023, especially as Nigeria look towards the change in leadership come May 29th of 2023. Well, joining us live in our Lagos studio to take stock of major activities of the past year and, of course, looking at the new year and all of the contending issues. He is the Chief Investment Officer of AfriInvest West Africa. He's a friend of the house, Mr. Robert Omotunde. Thank you so much, Mr. Omotunde. It's good to see you. Happy New Year to you.
Happy New Year to you. Thanks for having me.
Yes, I'd like to start on that note. It's quite negative. The IMF is starting the year saying one-third of the economies across the world will slip into recession. That's, for me, is worrisome. Were you expecting that? Considering what is happening in China now in regards to COVID and even threats here in Nigeria, do you think that that's what's going to play out in 2023?
Well, we think that if you look at dimension the issues that major economies face in 2022, it borders on inflation. So 2022 was a year of inflation. And no thanks to Russia for the invasion of Ukraine, a war that is still ongoing. Yeah. But somehow the major players within the global space have been able to navigate these issues. Of course, tightening was the big thing across major monetary policy and systemic central banks across the world. And this projection is also stemming from that particular headwind, which is that inflation is rising. Inflation is no friend to growth. Everywhere you see inflation, then you begin to have economic growth concern, and that's what is going on now. We may see the bigger economies being able to weather some of these storms. I mean, if you look at U.S. economy, for example, is an economy that we think may not slip into recession, even though there are, I mean, if you check across projections from major banks within the U.S., J.P. Morgan, Barclays, BNP, Paribas, and the likes, only just a fraction, I would say, of these banks have been, projecting a recession for the U.S. economy, for example. But there are some economies that definitely may not be able to avoid it. Ukraine is a war zone, Perhaps Russia may also not be able to avoid a recession. And then some economies that are interlinked. Nigeria is not an exception in terms of how we have had our fair share of inflation as a result of the Russia-Ukraine war. So if IMF is projecting that one-third of global economies will slip into recession, it's not unexpected in terms of how inflation has dominated the space and how some of agricultural commodities have been affected. Wheat, for example, global wheat supply has been affected because, a chunk of it also comes from Ukraine. So it's not unexpected, but we think that major economies will weather the storm because they also started acting early. Very early in the year 2022, started seeing tightening across systemic central banks.
Yeah, the central banks actually pressing the hike button. So that's what we are seeing.
Yes, Central Bank Nigeria also followed, the trend in the global economy.
What did it pay off?
Well, I wouldn't say it's paying off yet. The reason is because we have a different scenario here. We have a different economy. Let's think about it. The bulk of our issues, unlike an economy like US, even though their inflation phenomenon was also fueled by high level of energy prices, right? So it was a supply side shock that resulted in inflation. in the US and in most economies. But because they have an effective transmission mechanism, right, between monetary policy and market rates, you could see the effect. Even though there was still, for 2-3 meetings that Fed was tightening, the impact on prices did not show until much later in the year. And for the first few periods that Central Bank of Nigeria was tightening, I think they were playing lip service to it. MPR was going up, and the DMO retained the rate for bonds prices. We didn't see so much translation. Even the securities issued by the central bank itself, almost securities, remained at a single rate, for a very long time before we now started seeing markets respond to it. So, our own transmission mechanism seems to be broken, and we need to do a lot to make that transmission effective so that when there are shocks coming from the supply side, you can use the demand side to fix those shocks. Otherwise, we are gradually building an ineffective monetary policy system where, it will just sound like a rhetoric when the monetary policy is taking any action. That should not be the case, but I think that is what is happening right now. You've seen the tightening moves by the, monetary policy authority, but have we seen direct translation into inflation? Is still high. Our projection for 2023 is even not a respite yet, because again, remember, this government has promised that by mid-year, subsidy will be done away with. That will create another pressure point, which has its own ripple effect on different prices within the economy. So, and I'm not sure how much monetary policy can do to tackle a cost-driven inflationary pressure. So those are the challenges. We have our own kettle of fish, if I may say.
Well, I don't want to stay so much on this fiscal and monetary side, because we keep saying that these two must work together.
Absolutely.
If we are to achieve inclusive growth.
Absolutely.
That's it. But in this part of the world, or in our country, it seems like an example is the Naira redesign thing, where the minister was saying, well, I'm not aware of this and all of that. Yes, as much as the CBN has some powers in their laws, I think there should still be that synergy. Looking at yesterday, the breakdown of the budget, I don't think the CBN got, it's not, I think it's even in town. But are you worried about funding that spending plan? That is what everyone is talking about. How do we raise money to fund this more than 20 trillion naira budget, looking at our expected revenue?
Absolutely. We're worried about how the government will fund the 2023 budget. And we are not just and we are not just worried for this year. We have been worried how they funded 2022 budget, how 2021 was funded, how 2020, in the peak of the pandemic, was funded. We're just talking about inflation. That are we seeing the impact of interest rate hike on inflation? On the one hand, the central bank is tightening, or let me say the Monetary Policy Authority is tightening, but the central bank is busy funding the government through ways and means. It's like you can't eat your cake and then have it. You tighten. When you tighten, how much are you able to mop from the system relative to how much more you are pumping into the system? Because the tightening is about saying inflation is a monetary phenomenon. To deal with it, control money supply. So when you raise interest rates, what you are doing essentially is to control money supply, to make the yield environment attractive so that those who have funds can give their money to financial institution, and get those money out of circulation so that they don't put pressure on domestic prices. That's the whole idea. But when you now tighten, right, on the one hand, maybe that tightening measure is able to mop up 2 trillion, hypothetically. But you are printing 10 trillion and giving it to government. The system will be worse if inflation is indeed a monetary phenomenon. So in 2023, it's worse. Let me put it that way. It's much worse. If I can also say, because when you look at the budget, 20 trillion, government's projected revenue, I think it's about 10 trillion, right? But I dare say that the realistic revenue assumption should have been within the neighborhood of 5 trillion. If you go by the budget performance in 2022, if government does well, maybe they're able to, raise the bar and hit about 7 trillion, right? But let's even concede to that assumption and say government needs to borrow 10 trillion, where is it going to come from in 2023? The average borrowing in the domestic market, right, is roughly about 2.5 trillion within the domestic bonds market. The treasury bills market has been continuous rollover. But even if the government can access additional funding from the treasury bills market, let's say they can access another 1 trillion, right? We still have a gap of about 6.5 trillion from a 10 trillion deficit. If the government, don't forget, this is if the government meets the revenue of 10 trillion. So where is that deficit going to come from? Already, the minister has already mentioned that international debt capital market is not approachable now. But I dare say, even if we can approach the international debt capital market, what is the quantum of issuance we can get in that space as well? At the current exchange rate, at the official conversion rate, and how much more can we raise? Last year, not last year, 2022, yes, there was a tapping in the market last year, 2022, I think of about $1 trillion. $1 billion, I mean. The year before, which was 2021, government raised about, I think, 3.5 or 4 billion from the international debt capital market. What can we raise in an environment where yield environment is also high in the international debt capital market? So what we are likely to see is a scenario where, you did mention what government has spent on debt servicing already, as at 5.2 trillion, as at 2022. Now, these ways and means that the president has applied to the National Assembly to securitize has its own debt servicing implication. The implication is that the minister is proposing that there will be about 30-year instruments that will cover it at 9% per annum. Don't forget, we are talking about ways and means in excess of about 21 trillion. First, that 21 trillion, it adds to your debt stock once it's about to be securitized. 9% of that 21 trillion becomes your debt servicing cost on an annual basis. That's about another 1.9 trillion naira. So if you add 1.9 trillion to 5.2, right, with additional debt servicing that you're going to be taking, I dare say that debt servicing cost 2023 will be about 7 trillion. This year, we are at a debt service to revenue of about 83%, right? Now, if you add this additional debt servicing cost that we are talking about, including the debt servicing for these ways and means, you will be talking about a threshold of almost 100%, if not higher. That is on the assumption that the government is able to meet at least hit 7 trillion naira revenue. If they fall short of that, the ratio is going to be higher. So we are in a deep mess. And I mean, I don't envy the next president of the country because there's a lot to deal with. There's a lot to deal with, And
where do you think it should start from if we are to set an agenda for whoever becomes the CEO?
There are low-hanging fruits, and I'm glad. The leading candidates, none has said he will retain subsidy. None. Because that's a low-hanging fruit. If subsidy is gulping up to 4 trillion of your revenue, it's clear that if you do away with subsidy, you can save additional 4 trillion revenue for your country, and you have more capacity, to run the affairs of government. That's a low-hanging fruit. We should do away with all forms of subsidy, whether in exchange rates, right? We should make sure that our exchange rate is reflective of market pricing. We should do away with subsidy on oil, which is, of course, PMS. We should do away with subsidy on power, right? Although these are things that suck the revenue potentials of government. When we do away with all of this, like I said, it's a low-hanging fruit. If the next president is not going to fail, those are the things you should tackle. And I think we've gotten to the point, sensitization about subsidy removal is more than 20 years.
It's interesting to say we can remove, stop this, stop that. What are we going to use to cushion the effect of all of this? Let's think about it. You see, the narrative has been peddled for too long. And that's why I said sensitization about subsidy removal is older than 20 years in this country. Remember, the president before, I think that should be the last president, was the first that attempted to remove subsidy in 2011, before we all occupied Nigeria. Between 2011 till date, we are talking about 12 years after. There are a number of information that, people are now more aware than we were at that time. I think the job of government should be
to make people, let's present the real facts. Because most times we just say, oh, when you remove subsidy, the poor will suffer. I dare say that the poor will not suffer because the rich are benefiting from this so-called subsidy. We are subsidizing the billionaires. We are subsidizing the millionaires. We are subsidizing, the middle class. That's what we are doing. You can afford to buy a car. You're not poor in the Nigerian setting. Why should we subsidize your lifestyle? That's what we are doing.
Some have to save have to do a lot of savings before they buy those
cars.
But
you save and you can afford to buy. Do you know there are so many Nigerians that if they save from now till eternity at the rate of income they earn, they can never afford to buy a car?
Yeah, correct.
So the truth is that why should we be funding the lifestyle of the rich and the middle class? That's what we do when we pay subsidy, honestly speaking. So, and if we are going to address the matter, it's easier to address that way. How many of the of the masses can afford to buy a car, so they don't buy a car? How many of them even live in cities such that they need to jump from jump transportation to get to their workplaces? A lot of them are in rural areas. Farming is their major preoccupation, and if it's not farming, it's a trade that they can easily access without necessarily jumping on any means of transportation. So the truth is that the argument we should be making is when you save that subsidy, what are we doing with the additional funding? You can use the additional funding to create infrastructure. You can use the additional funding to build capacity, to leverage more, to develop on different critical aspects of the economy. You can use the additional resources to invest in education, to invest in healthcare services. These are things that benefit the poor, not subsidy payment.
Trust.
Yeah.
That is trust. Because the people will need to trust government. If we stay on discussing the regulation, I know we will spend all of this time on it because the people need that trust that truly if this money is moved from subsidy, it's used for initiatives or whatever that will benefit them.
And that's where, citizenship responsibility comes in, right? When we elect leaders and they are in office, but they are not doing our bidding. If they are not doing what we want, what do? We fold our hands as if we are helpless, as if there's nothing we can't do. We can call them to account. You see what I mean? Through advocacy, pressure groups and the likes. And we can also speak with our tongue during elections. Luckily, one is coming.
Yeah.
This is the reason why we should choose right when we are electing our leaders into offices. So, but to say that leaders should continue to do what is wrong because we feel we don't trust them, I think it's a disservice to this country that any of us could do. I mean, it's unfair on any president for Nigerians to insist that we should continue to pay subsidy. It's unfair. Oh. And we cannot demand for critical investment in critical sectors because the president will not spend his personal money to run the country. He will spend the resources of the country that has been entrusted in his care to run the country. So if we are serious about, developing our country, and we want to follow the pattern of countries that have successfully industrialized, then we need to begin to rethink our ideas, ideologies about the markets.
As much as I support the regulation, because I think we're going to end it on this deregulation issue,
Yes.
It's very important that we let Nigerians understand. As much as I would also support the removal of subsidy, analysts would argue with you. You're an economist, and they will tell you that diesel today has been deregulated.
Absolutely.
And we see what is happening in the market. People are buying diesel for as much as 800 naira. Manufacturers, hoteliers are crying how this is eating up business. Aviation fuel is also not deregulated, and we see what is happening on that market. I'm not holding brief for anyone. I'm just facing, stating facts. No, so why do you think Nigerians won't be worried?
You see, two wrongs will never make a right. One of the attributes of a free market is that there are market actors that will rent seek, that will want to take advantage of the market. That is the role of a regulator. You see what I mean?
Yeah.
Now, if you have a deregulated market and you still have, the monopoly of a seller, for example, the tendency that you will not enjoy the full benefit of the regulation exists.
Yep.
But when you open up the market, and I think that as we move towards full deregulation of PMS particularly, we are aware that the moment we say one major supplier or one major producer is the supplier of the entire country, we have not solved a problem. Because what will then happen is, there are antitrust laws that must be put in place to ensure that there are many producers, many sellers in that market, such that to form a cartel becomes almost impossible. Because the moment you can form a cartel and you have an oligopolistic kind of market where you have few sellers, the tendency is that they can constitute a monopoly. Because when you have few sellers, they can form what we call collusive oligopoly, where the sellers themselves have collided and they are giving you one price. Even though you have 4, 5, 6 sellers and you don't have a choice than to buy. So, I mean, all of those issues, let's ask countries that are fully, moved towards market principles, towards running their economy, and how have they done it successfully? Antitrust laws, those are ways to check the excesses of, few sellers and ensure that the citizens benefit ultimately.
Very interesting. If we can do this in 2 minutes,
yes.
Back to revenue
for
our budget, and that big document is also there, the Finance Act, and many are talking about it. That yes, that needs to come with the budget so that we can get some more money. I don't know what is your own. If you've seen the document, what's your take with regards to what we have for 2022's Finance Act?
You see, I allowed the efforts of government to look for alternative sources of revenue, because the problem...
That's a good one.
Yes,
a little bit of positive there, right?
The problem we have is paucity of revenue, right? Because today, when you ask people in government, in budget, budget DG is always saying this, Mr. Kabuize, it will tell you that our problem is not that, we are breaching debt to GDP levels.
Yeah.
The problem we have is a revenue problem. Okay, so if we know that we have a revenue problem, what are we doing to solve it, right? Getting additional revenue from existing taxpayers is one, which is government, what the government is trying to do. But much more, getting more people to pay taxes, right? Or getting more people to come into the net, because there are some people that cannot come into the bracket because they don't earn enough, or they don't even earn at all. So what are we doing to solve unemployment problems? Because when people can work, they will pay taxes. It's by default. If there is opportunity to create more jobs within your industry, within your space, within your station here, as you create people in, by default, they pay taxes, because you are an organized setting. How many more of those organized settings can we, infuse into our system to de-emphasize the informal nature of this economy? Because as we speak today, think about 53% of the economy is still largely informal. What can we do to formalize the informal segment of this economy? And those are the conversations that can help to deepen the revenue profile of governments.
Mr. Robert Omotunde is the Chief Investment Officer, AfriInvest West Africa. Thank you so much. It's your first appearance this year.
Thank you for
We appreciate this. Thanks so much for your contribution.
Thank you.